Tesla stock is up about 1.4% on the day today, and there's a lot we need to talk about. But I want to start with this clip from Barron on CNBC today that had some very positive things to say about Tesla stock. Keep in mind the NASDAQ is down over 1% today, and Tesla stock is doing fantastic. Up now almost 1.5% at the time of recording this video, and maybe there's a trend there. Maybe Tesla can do well as the markets do poorly and kind of flip-flop what you've seen in 2024 where big tech was doing great and Tesla was losing. Maybe roles flip here. We'll see. We do have some big earnings coming out today and after hours, and we'll discuss those as well. But let's start with this clip from Barron.
And I'm going to catch up again. So what I think about the reason stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars. $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting. I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies cost them $5,000. We can make a motor for $1,000. Cost $5,000. So they get.
Yeah, but then you have to have a battery that's more expensive.
Oh no, I'm talking about if you're making the internal combustion engine cars. I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated. That they don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched and they do things without trying to make things better and cheaper and faster all the time. There's no incentive to do that. So Munger says, show me the incentives and I'll show you how people act. Mm-hmm. And that's the idea, that the incentive, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that's the reason stock's down. And now
So what's the reason it's going to go up and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom. Okay. And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to, but overall, until they expect to do 5 million of these new cars.
Can I ask you a robo-taxi question? Because that is, I think, the future of this company, yes. And a lot of the value is reliant on that. Mm-hmm. The question is what you think the genuine timing of a robo-taxi that's reliant on cameras only, and this has always been the question about can you do it with just cameras relative to what Waymo and Cruise have done, and there's been even questions about that, using the radar and the LiDAR and the whole rig that lives on those vehicles.
Well, we have a small investment in Cruise because I wanted to see what they're doing. And Waymo is, their cars are $250,000.
Because of all of the sensors and all of
and they're trying to take cost out. And for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every 90 days.
I don't disagree with you. The question is a timing question of how quickly you can actually put these things into the wild.
I was just in California. Last Sunday, I was in Vail because I want to see what they're doing with AI in the mountain and capital spending. And then that was on Sunday. And then on Monday, I was in SpaceX in LA in the morning with some engineers and some finance people. And the afternoon, I went to Tesla, and I was with the autonomous driving people and also the compute people. And then afterwards, they said to me, Ron, would you like to see how we've made unbelievable advances? The first 11 versions had to be designed so that they had to code every single thing that happened.
Right, now it's all AI.
It was impossible. And so therefore, they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12. They have all this enormous amounts of data, and now they have compute to figure out. Humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So I said, okay, show me. So we do the few hours, couple, 3 hours, and then before I'm going to go back to New York, I say, okay, so I want to see how it works. So we go into a parking lot, and we get into the car, and I have an analyst with me, and then they had the compute person, and they had an investor person. And so we're sitting in the car, and so where do you want to go? So I want to see Steve Jobs' house. And say, okay, so they punch in the address, and we get into the car drives around by itself. Didn't do it, all we did is punch it in. Drive around the parking lot, goes to the road, there's traffic going both ways, it looks both ways, looking for an entry to get in, gets an entry, pulls in, makes a left-hand turn, drives right behind cars in front of us, there's a stop sign, first car stops, goes, second car stops, goes, we pull up to the stop sign, car looks both directions, makes a right-hand turn. Just drives. And then all of a sudden there's a pedestrian crossing the street. The car stops to let the pedestrian cross the street. The pedestrian, I don't know if I was being set up on this, but the pedestrian waves, and then the car starts going again. Then it pulls up, then it makes a left-hand turn, and then goes in front of Steve Jobs' house. It's a nice house. It was just a house, though. I was expecting a house, but it was a house. And so stopped in front of Steve Jobs' house. Then he has that house, and he doesn't, his wife does, the house next door. Then they had looks like 3/4 of an acre for sale next door for $15 million. They don't go back.
That's a
but
little creepy,
it drove
Ron.
all by itself. Yeah, all drove by.
Take me to stalk somebody's house.
It drove all by itself. So what's going to happen is that I thought the idea had been that you're going to sell a lot of cars. So as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
That's the long-term thing. If Tesla's everywhere, just like
if they're making
Tesla
cars,
charging.
if they're making cars, they make $7,000 in profit a car for a car they're selling for $35,000 minus the $7,500 credit.
But what's your timing? But just give me the timing. That's the whole game.
Now. It's now.
Finally, someone that has some sense on CNBC talking about Tesla. That's refreshing in and of itself. But there's a couple things that he pointed out that were very notable. Tesla has bottomed, and it's going much higher from here. I do think Ron Barron had another very good point, that the reason why Tesla stock has been falling, that whole kind of thesis is over with. And that thesis is Tesla is canceling the Model 2 or delaying it for a long time. In fact, that's not true. In fact, Tesla is going to spend less money by not needing to fully, build out Giga Mexico, not even needing to build out any new production lines. And they're just going to build the Model 2 on the current production lines. That is less capex, less investment on Tesla's part that will make these vehicles, one, come faster, but come at a less expensive cost. That's a win-win on top of, hey, maybe by the end of this year. And a lot of investors were starting to fear, especially big money. I know you guys weren't fearing this necessarily, but big money was fearing Tesla could cancel the Model 2 for the next couple of years, go all in on the robotaxi, and that could take a couple of years. So now you have a couple of years of a lack of growth for a growth stock that is trading at growth stock multiples. That would have been a problem, a big problem. That did not happen. In fact, we now get the robotaxi, maybe even the robotaxi, at least cheaper models coming by the end of this year, if not the beginning of 2025. And by the beginning of 2025, I think it's important to remember that the comparisons on a year-over-year basis are going to be much easier. Tesla hasn't had the greatest earnings in 2024 so far, and they're probably not going to throughout the rest of the year. That means once you start Q1 2025, 3 quarters from now, the year-over-year comparison looking back to Q1 2024 is going to be much better. You're talking hundreds of percents likely of an increase to EPS. And that will also help Tesla stock go higher in 2025. 10-year Treasury yields are also at 4.70%, which is the highest you've seen in 2024 so far. It's been basically straight up for 10-year Treasury yields this year. Inevitably, when these do fall down again, when they do come down to 4.5, 4.4, 4.3% or lower, at some point in 2024, I'm expecting that's also going to be another tailwind for Tesla, as most financing companies go off of the 10-year Treasury yield, not necessarily what the Fed is doing. So you could theoretically see, in a wild scenario, the world revolt against treasuries. Treasury yields could rise rapidly, even though the Fed is theoretically cutting rates. Like, they don't have to be connected to each other. So 10-year Treasury yields have been influenced recently by a bunch of different factors, mostly strong economic data, but inevitably these will come down, especially as the economy does weaken. Investors will buy the 10-year Treasury and send yields lower, which will be good for Tesla's overall business. And let's also not forget that you've had 4 quarters, besides last quarter, 4 quarters of a disaster earnings call with no clarity, no questions answered, literally nothing. And what we just got was way different. It was a new Elon. It was Elon in war mode, getting out there, answering questions, even questions he didn't like or didn't want to answer, getting out there and answering them to the best of his ability, as well as the rest of the Tesla team. I feel like I walked away from that conference call with a lot more clarity on what Tesla is currently doing. And I think that's important because in the near term, what affects stocks? Well, a lot of things affect stocks, but directly it is earnings estimates going higher or lower over, the next coming quarters. That's what affects a stock a lot, but also uncertainty, right? If it's uncertain what's going to happen with the business, how things are going to be, that's never going to be great as well. And you've had a lot of uncertainty for Tesla that I think really just got pushed back. So let me know what you think about that down below in the comment section. Let's go ahead and get into everything else you need to know and the data today for Tesla stock and the broader markets. Now, as I just mentioned, the 10-year Treasury yield is up about 5 basis points today, which is a new high for 2024. Now, we did have some data that came out this morning, and this is very interesting because the GDP growth rate quarter over quarter, advanced estimates for Q1 came in at 1.6%. The estimate was anywhere from 2.3 to 2.5%. So you missed expectations on your GDP growth rate quite a bit. You would expect that to have a, negative impact to yields. Thus, yields could fall on that, right? Because maybe the economy is not as strong as we thought. But when you look under the surface, what some of these pricing metrics of GDP look like, they kind of looked inflationary. And I think that's why 10-year Treasury yields are rising today and having that, downward pressure on especially your small caps. You have GDP price index quarter over quarter coming in at 3.1%. The estimate was 2.9%, so high there. You do have core PCE prices quarter over quarter that came in at 3.7%. The estimate or forecast was about 3%. So that came in much higher than expected. And then you have PCE prices quarter over quarter as well. They came in at 3.4%. The estimate was 2.9%. So your PCE prices quarter over quarter, real prices out there went higher by a lot more than what markets were forecasting, whereas the actual GDP itself came in a lot lower than estimated. So I don't really know what to make of that. These are just the first numbers and they will get changed, revised up or down. So I think the markets are kind of saying, hey, this doesn't look good, but we're not going to go full-blown panic mode right now. And I think that's why you're only up 5 basis points on the 10-year Treasury yield, not 20 today. Because some of these numbers here, as far as, again, pricing, they're really high. Like, that's showing a pretty inflationary environment. We do have some earnings today in after hours. I shouldn't say some earnings, the big earnings. You have Microsoft, Alphabet, Intel, Snap, Roku, Western Digital, Dexcom, T-Mobile, Gilead, and Jinko Eagle. obviously, it's all about Microsoft and Google. I think these stocks today, they're falling 2 to 3% a piece. You're set up in a better way heading into earnings, but these stocks are still overall at all-time highs. So I think expectations are still high, and these companies still need to come out and wow investors, or they're probably going to fall after earnings. Now, you are expecting anywhere from a 5 to 6% move for Google as well as Microsoft. As you can see here, Google is pricing in about 6%, Microsoft pricing in about 5%. And I mean, even for context, Tesla is pricing in around 10%. That's roughly where Tesla moved on earnings. Now, Meta came in worse than expected. They were still pricing in 9%. They ended up dropping over 15%, and that was because it was worse than expected. So if Google or Microsoft have, bad earnings or, are worse than expected, they could fall 10% a piece or rally maybe 5% a piece if there's really good earnings and they wow investors. I just think it's pretty hard to wow investors when these stocks are at all-time highs and expectations are, well, at all-time highs. Tomorrow, we do have core PCE, personal income, and personal spending coming out, and we will discuss that in the next video, coming out at 8 p.m. Eastern Standard Time tonight. The latest AI investor sentiment survey is coming out today. People are less bullish than they were last week, and for 4 weeks now, you have seen a decline in bullish investors. Now, for the first time, there's more bears than bulls, which, as a contrarian, sets you up for maybe the sentiment's getting a little bit too bearish. But I think people are still pretty bullish, at least big money, hedge funds, institutions on big tech. I think that's why these earnings here and after hours will be so important, and they're coming out right at about the time you guys are seeing this video, and we'll talk about that in the next video. Now, bullish investors at 32.1%, neutral investors at 33.9%, and bearish investors at 33.9%. So both neutral and bears are higher than the bulls. You don't see that all too often. If we take a look at inventory numbers for the Model Y, they are going up over the past couple of days, going from about 6,400 up to about 6,900. So a little bit of a change there, just every day kind of stair-stepping higher. The Model 3 is also hitting the highest point that you have seen since December of 2023. So maybe production starting to crank up a little bit there for the Model 3. Model 3 sitting at about 2,600. The Model X right behind it at about 2,500. And the Model S is down here at about 1,300. Tesla continues to run about 4,000 different ads with Google. Google Trends data for full self-driving recently hit 100, fell down to 40. Now it's back to 48. If we can trend in the 40s, that would suggest a take rate that is much higher than what we've seen in the past. That's kind of what Elon Musk alluded to on the earnings call, but I don't think they know what the full take rate is going to be until the free trial is over, because most people use the free trial and then they purchase whatever it is that they were using in the trial. Google Trends data for the Cybertruck is sitting here at some of the highest points it has been at. Down a little bit, down to 61 from 62. But take a look at the Model 3 and the Model Y, absolutely exploding. The Model Y going from 30 to 39. The Model 3 going from 24 to 34. And even the Model S going from 11 to 14, and the Model X going from 9 to 11. You are seeing accelerating search trends in Google for all Tesla's vehicles. If there's another better sign to show what Tesla's deliveries are likely doing, let me know down below in the comment section. But I think this is a pretty strong sign that Tesla is going to do just fine in Q2. Here today, Emmanuel Rossner with Deutsche Bank, he raised his price target from $123 per share to $136 per share. There's only been a couple price target raises in this the latest earnings season, but indeed, you're starting to get some, which is a lot different from what you've seen before. Now, Tesla has an average price target of $183.83, implying upside from here of about 13.5%. And Tesla has an average of a hold rating 23 analysts rate Tesla a hold, 8 rate Tesla a sell, and 17 rate Tesla a buy. Option activity today in Tesla stock is very positive. You can see 465 orders totaling $230 million with a positive order value of 64%. And some are pretty notable, like this January 17th, 2025 $300 call worth $111,000. And you're actually getting a lot of option activity around that $300 call towards the beginning of 2025. Here's another trade, exactly the same trade as I just mentioned, for $154,000. Here's another one here for $73,000. Here's another one for let's see, $217,000. Here's a March 21st, 2025 $300 call for $208,000. Here's another January 17th, 2025 $300 call for $60,000. There's a lot of $300 calls coming in today, and it really makes you wonder, like, hey, is that what big money's starting to think? Is that how they're starting to position their options trades in Tesla, around $300 by the end of this year? I don't know. We'll see. We'll talk about that more in the next video. And finally, for the first time in a long time, you are seeing shorts starting to cover on some of their short positions. Now, not a massive amount, it's barely moving the needle, but you can see some of that reflected in the data. You have short interest of free float declining from 3.88% down to 3.84%. You have $17.26 billion currently in short positions. Shorts over the past 2 days have lost over $2 billion shorting Tesla stock. You now have 106.45 million shares that are currently sold short. Now, on the day today, you have return shares, aka covered shares, of about 1.6 million. You have borrowed shares of 567,000. So there's more of a demand to cover than to short at this moment in time, which makes a lot of sense as the bearish narrative around Tesla has somewhat just collapsed. Now, there's obviously problems with near-term profitability, right? There's delivery issues, demand issues, quote-unquote demand issues. I think the Cybertruck halo effect and the Google Trends data that I just showed you are a sign that maybe things are not going to be as bad as expected. After all, Elon Musk said he expects a positive year-over-year growth in deliveries, which would be over 1.8 million, probably like 1.9 million. But I think a lot of Wall Street is pricing in a number that still could be negative. And I think given what we're seeing right now, that amount of bearishness is probably not warranted. And that's probably why some shorts are starting to cover on short positions, at least the shorts that are smart. Over on StockTwits, sentiment for Tesla is much better than it was yesterday, which was kind of strange, if you recall from the last video. Sentiment yesterday was extremely bearish, even though Tesla was up 12%. Didn't make a lot of sense to me. Today, sentiment is neutral at 49, which is still just saying, hey, there's not a lot of people that are overly bullish on Tesla right now. And that makes me a little bit more bullish than maybe I otherwise would be if everyone was bullish on the stock right now. Message volume yesterday was extremely high at 90, which kind of just makes my eyebrows raise a little bit on this extremely bearish number. It's not like there wasn't a lot of people talking about Tesla. Everyone was talking about Tesla yesterday. A 90 reading on the message volume is a number that I have not seen in a very long time. Today, message volume is normal at 54, and the participation ratio is normal today, also at 54. The stock on a technical basis is back above the gap fill level that you've seen on April 15th. That's positive. You are actually above your 20-day moving average now as well, which sets you up for upside up to that 50-day moving average. I don't know when that happens. That could happen tomorrow. That could happen next week. But it looks likely that you at least come up and test that 50-day moving average around 175. As far as going higher from there, you're going to have a little bit of resistance around that 177 level, just a median trading range, and a lot of demand came in last time in this range. Overall, seen a lot of resistance here as well in the past. 1 day, 2, 3, 4, 5, 6 times in the month of, well, from March until April, like it was actually about a month from mid-March to mid-April. You found resistance at around 177 6 different days, like precisely. So that could be resistance again. If not, we're going to go up and fill the next gap, which is going to be up until about 188. If we can get above all of that, then you go to your 100-day moving average, around $200 per share. That's kind of the important levels that I'm watching here. But from now until 175, we really don't have much as far as resistance. So it could be a pretty clear shot to about 175. If you take a look at the MACD is still very much in the negative. MACD is negative 6.25. The signal line is negative 6.5. But you can see the yellow line is breaking above the blue line today, right here where my cursor is. And that is, in the short term, a positive sign. And if we pull up the RSI is now neutral at 50.52. You're almost exactly neutral right now, which that just means on a relative strength basis, Tesla stock's not even close to being too strong or overextended by that metric. Let me know what you think about all of this information down below in the comment section. Are you in the same camp as Ron Barron? Do you think the bottom is in? And do you think Tesla stock just goes higher from here? Where do you think Tesla stock is going next? Let me know all of that information down below in the comment section. Hit the like button as well as subscribe to the channel if you made it to the end of this video. Stick around a while, you might learn a thing or two. And most importantly, enjoy the rest of your day. If you also want to come trade with us live in real time as well, link down below in the description of this video. Thank you for watching, enjoy your day, and I will see you in the next one.